Alright guys, good morning from here. So I'm going to show you guys a live trade that I took on VIX 75, and you can see it right here. It's not on my demo account, it's actually my real account, and you can see it right here on the DRI server 2. So um, there is my real account. So I'll show you guys the analysis I did before executing the trade. So I will show you guys the before and the after of the trade. So this was when the trade got triggered, and then triggered. Nope, not this one. All right, sorry about that. All right, so this all right, all right. So this was the before the analysis. I did analysis right here, and I'll explain everything I did right here before I execute the trade. So that was when I did analysis, and then I was trying to see if I can get the dates. Alright, on the 6th of January I did the analysis, and then when was the trade triggered? It was triggered when? It was triggered on December 6th. Alright, so now we go to our chart. Alright, so this is the trade right here, and I'll explain everything that I did here. So first of all, like I said on my previous video, the last video I posted about the market structure, so like I said, you have to start your analysis from your higher time frame. You look at the bigger picture before you try to look at lower picture. So I start my analysis on the monthly chart, and I will take out every analysis I did before. So click on F8. No, I click on this, then object list, this all, then I delete all of them, so we could actually see every analysis that I did. So yeah, starting from the weekly time frame, excuse me. Alright, so first of all, start your analysis from your higher time frame. So I moved over to the monthly chart, then I noticed that we have what? A stop hunt over here on our buy stop. That is not actually a break of structure, it is a stop hunt right here. Now after the stop hunt occurred, what do we get to see? We get to see a break of market structure right here, because since we know the market has been bullish for a while, we have a high right here, it traded lower, create a low right here, traded higher. Instead of breaking the market structure, it just did a stop hunt, it traded lower, and we're having a break of market structure right there. So it is just a simple smart money setup that I've taught before on the YouTube channel. So we have a stop hunt right there, plus what again? Plus a break in market structure. Now when a break in market structure occurs, what are you expecting? You're expecting a return to order block, right? Down to order block right here. So looking from the monthly chart, we can see we are having a big body candle, which is our order block right here. As you can see, there is no sort of imbalances or stuff like that to say that it has to trade higher. Right here we have a full body candle, which signifies that this is a what? An order block. Now after the break of market structure, we see how the market trade back into the order block, mitigate the opening of the candle, and then we see it trade lower, right? So with that put aside, we do know that we still have a supply zone right here that the market might want to trade back in, but then I cannot wait for that to happen. And studying the algorithm, we do know that uh, we have a bunch of what sell stuff on every low. So we know the market we want to trade lower to come grab liquidity from this low. All right. So remember, when the structure is broken, every other set of sell stop is liquidity. All right. You can't say you want to buy from here, since we're having a high that's violated. Every demand zone you think of, you saw right here with no hold. All right. Remember, every high has a buy stop resting there, which is liquidity, and every low has sell stop, which is liquidity. So if the market has to be bullish, it means it is protecting the sell stops. It is protecting the stop on every sell stop, on every low, and taking out buy stops. Now, if the market change its trend from bullish to bearish, it means that it is coming to grab those liquidity that it left protected before, which was the sell stop, and then it will have to leave the buy stops protected. All right. So that is one thing you should understand about the market structure and stuff like that. So after that, run to the weekly chart, and we can see what it really mitigated over here is a mitigation block, because we have another block that was violated, and we now have a break of structure after the violation of the other block. So the other block that failed turned into a mitigation block because it failed to take out this high right here. All right. So the demand you thought you want to buy from will now hold because it did not break its structure. So it is now a mitigation block after the break of structure. The price returned back, and we'll see mitigate the failed order block, use it as a mitigation block, and trade it lower. All right. Now with the mindset of the algorithm, you do know the market has to come to take sell stuff from this low and this low. It has to grab liquidity, and I cannot wait to see the market trade back to fill this imbalance right here. So I was looking to see a recent structure, so I have to go to the daily chart, since the daily time frame is not as compressed as that of the monthly and the weekly chart. The daily time frame actually displays a clean chart. All right. And it is a swing trader, so most times I do swing trading, so I focus mainly on the daily chart. So now looking at the daily chart, I can see a recent structure, and it is a bearish structure. As you can see, we have a low right here. The market traded higher, gave us a high, and we now have what? We now have a clean break of structure from our daily time frame. Right now, after the break of structure, we see the market trade back into this area of supply from the daily chart, and what do we have again? Another break of what? Structure. Right. So this is my current structure from my daily chart. Now after that, I saw that I have another block right here. Most traders call that area of supply. Still the same, depending what type of trader you say you are. Either you're smart money concept trader, or you call yourself S&D trader. So I marked that area right there, and the idea is to patiently wait for price to trade back to the area for us to execute our trade. All right. Now the market trade back higher. Has it traded higher? What do we have it present? We have it present an inducement close to our order block, right? So it is a clean confirmation entry for us to know that my order block is valid. Like I always teach my students, that for you to validate a point of interest, you have to see liquidity around a point of interest, because the smart money, understanding smart money concept is that you should know that the institution grabs liquidity, use that liquidity to activate your order, and then distributes that order to another liquidity, which is known as a drum to liquidity. That is just simple. So we have an inducement right here. It traded lower. It did not break its structure. Most traders might think that based on they didn't start the analysis from the higher time frame, they are looking at the lower time frame. They would think that there is a break of structure, all right, based on their lower time frame, and they will want to sell from this area right here, right? I'll show you. So All this done, though when I did the analysis I don't have this inducement right here. This hasn't been printed right here. So if you go to my Facebook page, Dimitron's FX Trader, you will notice I post a lot on my Facebook page, and you will notice that this stuff isn't present right there when I posted it. So from there, let me just run down to the 12th hour so we can see something. All right, so this is the 12th hour, and this is our daily time frame order block. From the 12th hour, seeing this pattern, this is a king pattern, 2 weeks crossing each other, so it is known as a king. And those trading supply and demand, it is the last candle before the impulsive move that broke structure. But those that say it is smart money concept, they say the last buy candle before the impulsive move down that broke structure. So right here, we can see it clearly on a 12-hour chart. Most traders will see it as a supply and they want to sell from there, but it is a smart money trap, SMT. So that is it for that. And then rolling down to the 4-hour to make it quick. So right here, this is what I'm talking about. Most traders will see this as a high, and then see this one as a low, and they will say we're having a break in market structure. This is not a break in market structure since the candle closed above this low. It is not a break in market structure. This is a liquidity sweep. All right, and you know, plotting your market structure, you will know that the main thing is this low, the major external structure from your higher time frame. You will know this low is your major low, and every other thing you're seeing is internal liquidity of structure, right? And you can see clearly on our 4-hour chart that this is the king pattern amount from the 12th hour. We refine down to what, 4-hour. We take those two candlesticks. Now I continue doing the analysis to find a refinement. So right down to the 3-hour, and what can we see here? We have a supply zone, which is what, the last candle prior to the impulsive move that traded lower and broke our structure right there, right? But before then, we have minor break of structure, internal structural break, which is this low before we see trade lower, and also it took out liquidity from here. So it is a nice setup of stop hunt plus a break in market structure, right? And then I choose this area as my sell entry. If we go back to this area, you see I sold from this area right here. Then other sell entry I entered was from confirmation entry. All right, I entered confirmation entry using the lower time frame. So I will explain. Yeah, this is it. So the first sell, the second sell, the third sell, and yeah, I think that is it. And then we see it trade lower, right? So back to our M25. So that I am marked out, but then I need an extra confluence. Even though I know I have inducement close to my point of interest, I still have to get an extra confluence for my entry, right? So I'll take this off. Yeah. So running down to my 2-hour time frame, we can see the 2-hour candle right there. That is an order block, it traded lower. Now the extra confluence I got was that I have this demand right here that failed. Okay, so it's a supply and demand flip. But then the most confluence I got is that I have a significant support and resistance area, and QML, which is also a maximum pain level from here. So I marked that as a significant support and resistance area to give me an extra confluence of my entry, right? And I saw that from the 1-hour time frame. So this demand to supply flip was from here. It tapped to demand, it bought, but didn't take out this high. And then we see it form a failed high, trade lower. We see an MPL maximum pain level from here. You can see that we have a clean area of supply right here. So that is my refinement from the 1-hour time frame. All right, so we are having minor change in character right here, minor change of character right there, before we have the major break of structure right there. But then the extra confluence also is that I'm having what, another area of what, confluence, and which is support and resistance flip. So we have support, no, we have resistance, no, that should be support. We have support right here, and then we also have resistance right here. So it's an extra confluence. Not smart money traders don't know about this, but I do trade that. Not every smart money traders trade about that. Trade this pattern, okay? So we have fake out zones and support and resistance flip right here. And also you can also see this one did the same thing also. Our inducement did the same thing also. It gave us FTL. Alright, so still, let us say we have an inducement. It's a failed high, inducement right here. So when you see something like this, you are expecting to see a stop hunt on that high. Alright, and the stop hunt triggered the area of supply. Okay, so you smart money traders, we know this is clean area of supply. The last candle we have inefficiency found, right? So I'll mark this right here, mark this one, then I mark this one, and then I will say, all right, we have inefficiency, so I mark that inefficiency IFC, or you could call it imbalance IMB, or you could call it FVG. Most smart money traders also call it IPA, insufficient price action. So your confluence is your area of supply should have imbalance, right? The idea is that the algorithm will tend to play this to balance the price right there, so side imbalance, and then mitigate your area of supply for sell or area of demand for buys. All right. So I love this setup. Clean signal support resistance KML MPL. Then after that we have the major change in character. So that is the recent high and low. So we have a major change in character before we have our major break of structure from our daily time frame. So these are the confluence you need to have for your swing trade, and you can see it's approaching take profit, right, which is right here. This is very clean. It is very clean, and it's a live trade. So I took out some orders out of break even, so I left one open. So I'll show you guys right here. So yeah, with the minimum lot size, okay, so the sell was here and we see trading lower. I took off the two positions I had here and around somewhere here. Okay, so now take that off to avoid distraction. So let's continue. 30 minutes. This is the other block. So if you refine too much, the price might not tap into your point of interest. All right, so we take this other block right here. It's very clean on the 3 hour and the 1 hour, so we should stick to that. It is an institutional candle. Okay, so it tapped, see trade lower, and then we look for confluence. We move down to 5 minutes. All right, so we have this high right here. After price tap our point of interest, traded lower, and then we see break a low right here. So to me, I think I'll find a flip right there to sell from. So if you look closely, you can see we have a drop base drop. All right, this is where I had my second entry. Okay, then we have a flip from demand right here. Okay, so it tapped, I entered the market and it started selling down. Then when I have a break of structure right here, I entered my third position at this area. I think so. Let's see. Yeah, You can see right there the third position was there. So it's very good to learn the smart money concept, everything about SMC. It helps you have a bias to where the market will go to, and it's very important to learn everything about the algorithm or inside the smart money concept. That is the beauty of smart money concept, all right? That's the beauty of trading. That is the beauty of trading, of smart money concept. Understanding everything about the market, all right? So it's just a swing trade. How many days now? 2 days or 3 days. So that is just it. That is just it. Approaching our take profits. So, like I said, before you execute the trade, start from your higher time frame, run down to your lower time frame to have a refinement and to have your entry also. So we can see it just here as the price is trading lower, watching my take profit right there. So that is very clean. Smart money concept is very nice. So yeah, so make sure you like, you draw your comment, and you subscribe to my channel. So yeah, and follow me on Facebook also, Demetrius FS Trader. You see my setups right there, everything, and analysis and trade right took right there. I'm always active on Facebook and less active on YouTube. So yeah, see you guys later. Take care.